Dan, I haven't thought about that in a while. Good morning, Vietnam. Man, that was what's his name? If I'm not mistaken, that was Robin Williams. He had a great opening, right, in that movie. So, anyways, the reason why I'm going a little earlier today is because nobody really showed up yesterday with this thing going on, as you can imagine. With the conference, the symposium up in South Dakota, or actually west of me in South Dakota, up and maybe to the west. And so I figured I'd go a little earlier, and then people could always watch it if they have time in between a boring segment of the symposium. Because it seems like a lot of people seem to be, it appears as though a lot of people are watching that. So let's kind of go right to the heart of it today. CPI came out. I'm going to share my screen here. Hold on one second. Okay. And you can always go look at this. You just go into economic indicators. Market Watch will show you if you wanted to get a quick highlight of this. And you can see that the core CPI, they're saying the median forecast is the middle number. The actual is the one to the left. That it was 0.4. And now keep in mind, it's come down from 0.9, but it's still at 0.3. So it's still running hot on the core CPI. Now, keep in mind, folks, they love to say core is excluding food and energy, but I'm not sure when the last time the last time you could live without having any money being spent on food and energy. But in either event, the consumer price index was 0.5. So on an annualized basis, that's a pretty big number. Needless to say, I mean, they say it's at 20-year highs right here. And what we could quickly do is if we go CPI economic report, and let's see the government site. I like to go to Bureau of Labor Statistics. You don't have to remember, just type in CPI economic report, and then BLS, the Bureau of Labor Statistics, will pop up, and you pull that there, and you can quickly pull the news release. Today is August 11th. There we go. And you can see what they said in the news release. This is always a good idea for actually, I think every American should know what is going on with inflation. It impacts every aspect of your life, for the purchasing power of your money, your investments, your I guess how much you think you should be getting at work to keep up with inflation. All of that is tied to inflation. So over the past 12 months, you can see right here, all items increased by 5.4% before a seasonal adjustment. That is the biggest inflation number. I think it might be the biggest one of my career. And I've been doing this for over 25 years. I can't say that I ever remember inflation being this high in my entire career. I think you have to go back into the 80s to see this kind of inflation number. I have to double check, but maybe there was some one-offs, but this is on a rolling 12-month basis. Keep that in mind. It says over the past 12 months, folks, past 12 months. So this wasn't a one print, and it looks as though it's going to annualize at 5.4. This is actual 5.4%. So right here, you can see the breakdown. Energy prices, yeah, this sounds too low. I don't think they're only up 23.8%. I think they're up more than that. So this seems to be a little bogus. We could just look at the pump. So this whole idea that they're telling us our gas prices year over year went up 23.8%. That's kind of bogus. I don't know what to tell you. I mean, we almost need to create our own indexes because the government seems to push the envelope the way it wants to on this stuff. Used vehicles up 41%. Why did used vehicles go up so much? Well, because there's a shortage of chips for new vehicles. So that's why there's been this push to buy cars that are used. And I don't remember the last time I saw something like this. So we got a lot of firsts that are taking place. And so basically, the food away from home index was 0.8% in July. So that's eating out, folks. Largest monthly increase since February of 1981. There we go. I was just talking about I don't remember. This is just one of the components. This is food away from home, but I can't remember this going up as much as it is on some of these specific categories. The food at home index increased 2.6% in the past 12 months. Now keep in mind, this recent jump is what is really alarming, because restaurants, as a lot of restaurants shut down last year because of the virus, what happens? A lot of the restaurants shut down. They didn't shut down temporary. They shut down permanently. So we literally damaged the entire market of restaurants. So there's a shortage of restaurants out there. We need to have more restaurants start forming again, is what this is basically saying, right? 5.9% for meats, poultry, fish. That's a huge jump. Holy cow, look at this. Service meals rose 6.6% over the past 12 months. Full service meal, 4.3. They were the largest in history that were first set up in 1998, which isn't saying much, right? Because a lot of the inflation really took place in the 80s, early 80s, late 70s, early 80s. But these other numbers, you guys can see for yourself and pull this report down. But I just wanted to hit some of the highlights. So now, there's a company. So, because the market's not open just yet, we're going to look at some things pre-market, okay? So pre-market stocks, or some things that moved yesterday that are bigger, okay? So like, for example, yesterday there was a steel stock called Nucor that went up 10%, and it's up another 3% pre-market. So what we'll do is, there's one other company today that you guys might have heard of called Weight Watchers. This thing is down 25%. This is the old Weight Watchers. Now they call it WW. And I figure since they reported, I'm going to go over them first. Okay, so they reported stocks down 25%. Let's take a look at why the market hated the news. And so how do we do it, folks? SEC.gov. SEC.gov. You go in here, and we're going to type in the ticker. If you don't know the ticker, type in the name. And then here we go. I guess they reported last night. And so we're going to go right here, see what happened to Weight Watchers. I guess you can say it's on a diet. I'm just joking. It lost a few pounds today, folks. Lost a few pounds. Anyways, I'm not trying to be a jerk. Some people are in the stock. I hope it's an acceptable decline, and that in the context of their portfolio, so to speak, because constructing portfolios is not the easiest thing in the world, and it can get very agitating when you have something blow up, that you did the work, everything's in place, and then some bad things happen that you didn't see, or there's some unique events that transpired. So all joking aside, I don't like to make fun of people if they made a mistake in investing. I've made plenty of mistakes my entire career, and it's a never-ending process. You got to keep plowing ahead, figure out what you did wrong, look for new ways to make fewer mistakes, hopefully, and then you'll get better results over time. Okay, so it announced at the end of Q2 they had 4.9 million subscribers. Digital subscribers up 6%. Now, keep in mind, folks, Weight Watchers has kind of changed their business model to where I think they give advice, and they have this they have this more proactive approach of contacting people through the use of their information. So you can say Weight Watchers in some respects has evolved into a little bit of a data management company, as most companies in the U.S. that are doing well and recalibrating themselves, okay, in the financial markets are doing that. It's not just them, but you can see that, their revenue guidance, let me take a look here. I want to kind of see if they go into how much money they make off of this, okay? So here we go. Subscription revenue. Oh, this is why they got punched, okay? And when I say punched, why the stock is down 25%. So before, people used to think of Weight Watchers, they think about you buy the meals from them, right? You buy the meals, and then they make their cut off the meals. And now, and I got to see if this is still the case. Hold on a second. Digital. Let me see. So subscription revenues is 272 million. It's down 7%. Product sales is down 5%. So this is what spooked the financial markets. That even though inflation, folks, keep this in mind. We just went over the inflation number. The inflation number was 5%. So then if there is a 7% decline, but inflation was 5%, then they were really down almost 12%. Does that make sense? Because you cut both sides. It's like they needed to move this line by 5% in an ideal world to keep up with inflation. The fact that they went down 7, it's like falling backwards 12. It's going to be operating leverage in reverse. And sure enough, that's what happened. See, right here, 37% decline in income. Because your cost structure went up by 5% on inflation, but your top line fell by 7%. Okay? So this is a tough situation. Like, I'm not sure what happened that what they're going to blame on it. Because, things have been kind of open for a while now, and a lot of other companies have done okay, right? Because you got to remember, they're kind of round tripping a horrible quarter last year, right? And last year was a horrible quarter. We were still coming out of the pandemic, right? Right here, June of 2020. So even a year later, something has changed. A year later, something has changed. And so it's a really interesting thing to see. And I wonder what they would say. This is actually a company that's probably worth reading the earnings call reading the earnings call once it's been printed, or listening in on the earnings call. And anybody can go on and listen if you go to their website and look at investor relations. And they'll let anybody, I think for the most part, listen to what they're saying about the company. That's one of the cool things about the United States is not only do we have these reports that we can look at through the SEC that they have to publish, everybody that's publicly traded has to do it. The companies are pretty good at sharing their insights as to what they're seeing in the real economy. And I hope we never lose that as a nation. Otherwise, we're really in for a heap of trouble. That's one of the things that makes me very nervous. You can see the tax rate was almost 2/3 lower, 9.9% versus 28%. So I hope you guys only are paying 10% in taxes, I guess Mindy is saying that maybe they're dumping unnecessary subscriptions. And so it could very well be. We'll have to see what they changed, right? It would be interesting to take a look at it and see what they're saying is the reason why people are leaving them, right? Because current assets dropped by 40 million, 259 versus 299. Okay. And current liabilities, okay, well, that number fell faster, 247. So they have working capital. It went positive. Let's take a look at debt. Debt is very high, so $60 million. It went up by 50 million from January 2nd. And then, they have 180 million of deferred income taxes. That's a big liability. Okay, so we got a situation here where they have a negative number. Negative shareholders' equity is they have accumulated more losses than they've made. Or they bought back a lot of stock, right? And so, it looks as though their share count went up another 2 million shares as well. So their share count went up by 3% almost, yep. And then their debt went up. Their revenue's going down. Their margin's getting hit. And, that's what we have, folks. This is why we have, here we go. Here's a breakdown, folks. Digital paid. So at the margin, this workshops and digital paid weeks, this is what really hit them. 37% decline right here. You can see it. So this is the UK, almost down in half. CE, I don't know if that's Central Europe, down 50% almost as well. And so that's the part of their business that really seems to have slapped them hard. Let's see, New Zealand. So let me take a look and see if there's anything else. Consolidated revenues. We have North America. Yeah, their international business is not doing so hot. And so maybe this is why it's also getting beat up, is if people are worried what's happening overseas, right, with regards to these lockdowns, if they think it's going to start spreading over to the United States, then basically in this report you can see that Weight Watchers is going to have more problems than another company per se, right? They're going to be more tied. I guess their elasticity of demand, or the way people are going to behave. Maybe a lot of their clients are more concerned about going out if the virus is on the uptick, i.e. they might be more liberal clients versus conservative. I don't know. I think there might be a relationship between those two things. It's always worth studying. What type of customer base do you have, and how are they going to behave if things kind of enter the economy? Different people behave different ways. It's extremely important that you know that, so that you plan appropriately as a company. All politics aside, I'm not talking about which one's right or wrong. I'm just talking about what can impact the business. This is what the executive team should be thinking about. And clearly, Wall Street today is reacting to it, because I just showed you why it's down that much. I'm a little surprised it's not down more. And once again, I have no opinion on these stocks. This is all for educational purposes. But this is a pretty devastating report, for what this company has just reported. Period. So now keep in mind here, I'm going to share my screen again. Okay, you can see that this stock is literally, it almost behaves the way some of us, I'm speaking for myself, folks. When I go on a diet, sometimes I go on a diet, then I fall off the diet because I like to eat, and then I'm like, okay, I need to go back on the diet. So the stock was right here. You could see it was $10 in 2016, and then it hit $100 2 years later, and then it fell to 20. Then it rose back to almost 40, and then it fell back to 14, and now it's fallen from 41, 52-week high, and it's at 23. So this thing has been a roller coaster, to say the least. So that's that. So let's go to Nucor Steel, because that was one that had a really good day yesterday. So let's just look at a steel stock, and we're going to go to Nucor. Okay, because that's a material stock. Obviously, even with inflation, they've been able to have prices for what they sell go up faster than their labor cost structure. I mean, that's what this would tell you, right? Why the stock was up so much. Let's see how it translates to the bottom line of this company. So Nucor, they said they reported $1.5 billion of earnings. Wow, $5 a share. And then a year ago, it was $942 million. Wow, $3 a share. That's a massive move. So the first 6 months of 2021, they earned $8 a share compared to 42 cents in the first 6 months of last year. So that's a massive jump. Now, granted, last year everything was locked down, folks. So it's a little different. Okay? Then right now it's different than it was last year. And you can see last year, steel mills, everything was down. They took a lot of stuff offline. I'm sure they got some benefit from COVID checks. And so you can see their revenues exploded back to $2 billion in revenue for this quarter, up tenfold from a year ago. Okay, so that's the deal there. So then it says right here, shipments increased 3%. So even with higher prices, their demand is strong, and they increased 3% quarter on quarter. Okay, so that's good. That's momentum is growing. There's more strength on a quarter-on-quarter basis. So second quarter versus the first quarter of last year. And it was up 41% compared to last year. Let me take a look here. So the average scrap per gross ton was up 13%. So $457 a gross ton versus $405. And it's 61% higher than I guess you could say the first quarter of right there, 61% increase compared to a year ago. A year ago, second quarter was 284. Now it's 457. So, folks, people are buying up scrap left and right, and it's tremendously advantageous to sell your scrap metal right now when there's shortages that are taking place. Is what's going on. So, this is unbelievable when you look at it, like how much inflation is taking place. Just like even in scrap metal, you can get a lot more for your scrap metal than you could. So here's the number of tons, steel mill total shipments. Okay, this is tonnage data. You got to make sure you don't look at this and think it's earnings. This is tonnage data. So then the amount of tons processed in thousands is 41% increase year over year overall. And once again, this is before the look at how well Nucor is doing before the infrastructure bill was passed. So this is a gigantic gift. Okay, so I don't know what that was up top because their revenues went from 4.3 to 8.8 billion. So this other number here, what was the 2 billion that they're showing? Oh, this is earnings. My apologies, folks. This is how much they're earning. So even last year with the whole shutdown, they still managed to make money. Think about that for a second. So they still made money, but their revenues year over year went from 4.3 billion to 8.8 billion dollars. So that is truly remarkable. Nucor, well done. You guys have done a phenomenal job. I have no idea if it's worth buying, folks, but 303 million shares down to 297. So they bought some more shares back, and they have a very strong balance sheet. Look at this, $12 billion. Now, granted, inventories probably went up because of just the price of everything, and so that went up, but they have a very healthy balance sheet. $12 billion of current assets, only $3.8 billion of current liabilities, and look at all that money that they've been able to make. Right here, retained earnings, $13 billion of retained earnings. A little different than Weight Watchers, folks. Weight Watchers had accumulated losses. Nucor has accumulated gains. So just something to think about. I'm just curious, is Weight Watchers falling anymore? Let's just take a look. It's down a little bit more, down 26.6% now. Started, I think it was down 20%. So with that, folks, I'll do this again tomorrow morning because, until the symposium is over. And, more people are showing up right now than in the afternoon. But then, starting on Friday when the symposium is over, we'll go back to 11:30, and we'll do it at 11:30 and so forth. And, maybe I'll do a second one. We'll see. But I at least want to get this done in the morning when there's some people watching. Nobody really watched it yesterday. And then when I'm back at doing it in the afternoon at around 11:30, just so everybody knows, what I'm going to do is show the biggest winner of the day, the biggest loser of the day, and one of the biggest companies, period. And then kind of show how they look compared to each other. I think that hopefully people will learn a lot, and I'm sure I'm going to learn a lot too, because I've never really delved into the filings of the biggest winner and biggest loser consistently. I think it'll be pretty cool. So anyways, hope you guys have a wonderful day, and I will see you later. God bless.